All right. Welcome everyone. Welcome. I am finally back. All right, let's have Instagram people come here. All right. Hello, Bites. Please join me on YouTube. I am live on YouTube right now. For all the people on Instagram, please join me on the YouTube channel. It's in the link in my bio. If you click on the YouTube icon that's in the link in my bio, then you'll be directed to the YouTube channel. Hey. So I'm just only doing this live to inform everyone on Instagram that I'm live on YouTube. Love Bites, I am. Hey Frank. So if you just go to the link in my bio, you should be able to see the YouTube play icon, that play button on YouTube. And if you click on that, then you'll be redirected to my YouTube channel. Hey Frank, what's up? So I'm only doing this live here on Instagram to tell you guys that I'm live on YouTube. Hey, what's up, Hassan? What's up, Joel? Welcome. Alright, just letting the Instagram people know that I'm live. Since some people don't know, I'm doing the live only on YouTube now. Okay, so we will start in like 2 minutes here, guys. Thank you for waiting. Thank you all. Hey Dion, what's up? Hey, you're welcome, you're welcome. Yeah, so, I mean, you're getting better at that. I mean, that's a simple proof that you're really getting better there. But, you know, the stop loss is just, you need to get used to creating one right away in your head. Just like, it's the same thing with your profit target, okay? So, but you're welcome, you're welcome. Good evening, right back at you, Dion. There we go. All right. So why don't we go ahead and start here? So Joel, for your Apple trade, you know, obviously you knew your profit target, but your stop loss was the different matter, right? But you know, it's one of those few things that you just need to get comfortable doing, right? You need to know how much you're going to risk, like $1 or 50 cents from your entry or something like that, right? So, you know, it's really on the spot, obviously, right? Since the price is moving quickly, right? Especially with Apple, it's a very, very fluid and very volatile name currently right now in these current market conditions. So you want to make sure that you do always have stop loss though, okay? So now you just have to work on, you know, making that stop loss on the spot. All right. Can you guys all hear me? Is the music too loud? I know when I go back to the recording, sometimes the music is a little bit too loud. I mean, I know you guys can hear me, but you know, the music can be a little bit too drowning. But I know everyone likes the music, so that I know for sure. Okay, perfect. So I kind of want to talk about the market conditions, right? So we've been pulling back and back and back, and multiple accounts are probably blown up, right? Multiple accounts are probably blown up. I mean, that's a fact, right? And guess whose accounts have been blown up? All the people who got into trading back in 2020, right? So, you know, people see that as a very bad, you know, it's a very bad thing that this is happening, right? Where the retail traders are all, you know, basically they're blowing up, or they're just completely losing interest in the stock market and just leaving, right? And, you know, for me personally, that's a very good sign. It's a very healthy sign for the market, because this, okay, if you take a look at the monthly chart on SPY for the last 2 years, this was very unhealthy. Okay, this 2-year run up, very, very unhealthy. I would have loved it if we actually came back. Okay, so obviously the quantitative easing, the QE by the Fed was great, right? And we kept on going higher, right? Because the Fed was, you know, putting in money in the stock market and the economy, right? They're injecting money, right? And I think for the Fed, I think that one thing that they did wrong was that they kept on pushing the prices higher in the stock market as well. They kept on injecting money, even if we came back up above the previous highs before the COVID market crash. Right, and so it would have been great if they stopped the quantitative easing, if they kind of fall back onto their purchases of bonds, and kind of lowered their balance sheet. But instead, they went almost another year of quantitative easing, and so that just completely inflated the markets to levels that where I personally shouldn't think that the market should have gone. It was nearing 500, right? 500 per share of the S&P 500 here. And, right now, this is a very healthy consolidation, right? And for the people who just thought that they could just buy the dip forever, right? And if you guys have been with me for quite some time, since last year, or even 2 years ago, or even 3 years ago, this buy the dip strategy, right? Obviously, this was a very it's only been a 2-year-old strategy, but buying the dip or buying at support, right? Just because it's there's value in the fact that it's so cheap, right? The time is going to come where that's not going to work, right? And this year completely proved that point. That these people who have been trying to trade in the past 2 years, who just got into the stock market, right? They're now leaving, or they're completely blowing up their accounts because they keep on continuously buying the dip, right? Thinking that they're going to see the same results that they've seen in the past 2 years, right? And guess what? The past 2 years have been very volatile, right? We weren't having the regular, quote unquote, normal market conditions. So for the fact that these people are leaving just tells me that we may be getting back the 2017 to 2019 market conditions. And what were those market conditions? Well, there were normal conditions. And if you guys know or have been with me in the CFS Swing and Watch newsletter in 2 years ago, or even not 2 years ago, but if you were with me last year with the CFS Swing and Watch, I told you guys about how the market conditions were in 2017, 2018, and 2019, and they're very normal. And the fact that we didn't have these volatile, wild swings back and forth in the market, right? Obviously, people who did well here, congrats to them, right? But for the people who weren't prepared for this amount of just straight run up, okay, I mean, obviously, everyone made money, right? But it was unhealthy. And so, what I said last year was that I want these normal conditions to come back where retail traders did not have enough power over the institutional traders. And you might be thinking, wait a second, but the retail, frenzy that happened last year and the year before that, kind of provided some power to the general public instead of the top, 1%, the institutional traders, right? Yeah, that's true. That's great and all for society and everything, right? But the amount of volatility that was injected into the markets was incredible, right? I mean, it's to say the least, it was incredible. But at the same time, it allowed a lot of wrong thinking, right, in the stock market, and wrong perspectives that the stock market was easy. That all you had to do was buy the dip, right? And this buying the dip mentality brought on a lot of unhealthy habits that you should never ever have in the stock market, especially when you're a beginner, right? So obviously, for me, I went through 2 crashes here so far. Well, I would say this one right here, the current, quote unquote, crash or pullback that we're seeing, can be considered a nice little tiny crash. It's not really a crash though. I mean, it's just a normal pullback, kind of a bear market pullback here. But since I've gone through 2 crashes here, right? One back in late 2018 to early 2019, and then obviously 2020 crash. I would say that, in 2017, 2018, there was perfect market conditions in the fact that, we've had consolidation, we've had the nice run up and then nice little tiny pullback, right? But in 2020, right, and 2021, we just kept going up and up and up and up and up and up, right? So this just really, this mentality for the new traders here, thinking that they can just buy and buy and buy the dip, was very, very bad, right? And so the more that these people get out, the better it will be for the market. Does that make sense, guys? Right? As cold as I sound, right? It's, it's very good for the market that these people are leaving because, well, all the reasons that I just stated, right? So, I want these normal market conditions to come back because prices can act normally and they can start acting normally, right? And the market can actually start having some normal price action where we just don't go straight down or straight up for like 3 to 5 weeks, right? Or for months at a time, right? I mean, that's absolutely crazy. And even if it pulls back for like 2-3 days, right? I mean, what is that, right? What kind of price action is that, right? So, with that, let's go ahead and go over SPY. So it's Tuesday today and the second day of the week, of the trading week here, and the market is doing exactly what I wanted to do, right? I wanted to have a weekly candlestick that's green, and I want it to be green. I want us to come back this week, just a solid green week, all right? And next week, I don't care whatever it does. This week, I want to see a solid green week, well, because we have 1, 2, 3, 4, 5, 6 consecutive back-to-back weekly candlesticks that have been red, right? This is very, 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 this is very unhealthy. Hey, Finex Lay, what's up? Finally, man. Eli, what's up? So people who are on this live right now, this is one of our CFO analysts in the chat. He doesn't type much, but hey, he's always here and he's always watching. So he's very busy with his own life, his family and job. So you gotta understand him for that. But he's a very, very good trader, very good equity trader. Yeah, Eli, I'm glad that you're here. But with SPY here, like I said in the newsletter as well, right? We're already having a nice solid weekly candlestick being printed after 6 consecutive red candlesticks back to back, right? And like I said before, yes, last week and the last week as well, that I'm going to expect one solid green week, right? And so far, we're seeing that, all right? Hopefully, we end up with a nice green weekly candlestick printed. Okay, and like I said before, right, from this point forward, right, hopefully we're not just seeing, right, hopefully last week, right, because I talked about this not a doji, but this hammer candlestick here from last week, right, since we're on the weekly time frame. This wick here, hopefully this was not just a bunch of people buying the dip, right? Like I said before, the buy the dip people, I want them all out, right? I don't care if they blow up their accounts or they get bored with the market because the market's not going up anymore and they think that we're completely going to stay in a bear market or we're going to continue to pull back. Whatever the reason may be, I want them all out, right? And so, hopefully right here it wasn't just a bunch of people dip buying, right? And we're just seeing some normal price action. And so far on daily time frame, I am seeing some normal price action here. We're not just going straight up, right? We're not seeing continuous gap ups, continuous, big, full green candlesticks to the upside, right? Instead of that, we're actually getting actual candlesticks that are showing continuation, bounces, rejections, right? We're not seeing too much of a volatile movement on the daily time frame. Now, obviously on the intraday time frames, there is a little bit of a micro volatility where we're just continuously going up and down, rejecting off of intraday levels, but that's normal, right? That's normal. So, so far, healthy price action. In my opinion, we still have a little bit more of a room to move up. To be honest, we can head up to around 412, but at some point this week, I'm going to expect at least 1 to 2 days of pullback. So that I don't know if it's going to be Thursday and Friday or it's going to be tomorrow and Thursday. Who knows, right? But just based off the technicals here, we are now we just shoehorned right into a huge level of supply between 405 and 418.57. Okay, so like I said in the newsletter on Sunday, I kind of want us to see if it's volatile enough. If we get some sort of big catalyst, or if we haven't pushed out all the buy the dip buy the dip people yet, we might just see another push up higher to 418.50. But I do not want that, right? Remember, I don't want that. I want these people out. Okay, so I don't want them to gain confidence again that the market's just going to continue to go up again after buying a dip last week or something like that. So, 418.50 is also not out of reach, obviously, since SPY has been making huge ranges in the past few days, past few weeks, past few months, this entire year. So, it's not out of the question, but I would like us to go up to 412 and then reject. Okay, that's kind of my next level that I want us to be looking at here. So, oops, get that out of the way. Okay, so this is a main level that I'll be looking at, 412. It's obviously 4 more points, but hey, SPY has been moving plus 5+ points every single day almost. So there's a possibility that we can reach 412 tomorrow. But with that, let's take a look at the VIX. The VIX is poised to bounce actually tomorrow, which is why I told everyone to hedge with the SPY put, at least, with cheap contracts, at least, SPY puts that expire tomorrow, because we are seeing the prices come back down to the 50 SMA. Now, the SMAs don't really matter on the VIX. I mean, you can't really chart the VIX. It's just showing you the volatility, right? Is it a little too loud? Okay. Thank you. How about that, guys? Is that better? I don't know. My audio input meter showing that my voice is loud enough, but I guess the music is a little too loud. Is that better? Everyone, give me a thumbs up there. You guys should be able to hear me now, and the music at the same time. Hopefully. It should be a nice balance now. Okay, perfect. So VIX here, it's below. Remember what I said, guys? I want VIX to be below 20. That'll be ideal. But obviously, if the VIX continues to go down, that means the market is going to continue to go up, right? They kind of have an inverse relationship. It's not really, on point and like directly an inverted relationship, right? But I do want VIX below 20s. That'll be nice. But currently we're still in a pullback in the markets. So just to make sure, right? You always want to make sure that we're hedging, especially when people are getting too over leveraged to the long side, which is why, again, I told you guys to hedge with the SPY put at whatever long positions that you might have with equity or calls. But with VIX, we are right back at the 50 SMA, and guess what happened when we did that, right? When we pulled back in the first week of May, we bounced and the market started to pull back, right? So, tomorrow we might just see the same thing. Okay, oops. Jesus. So, based on this candlestick today, very bullish candlestick. We came back above this descending level of support, right? Retested it today and absolutely blasted upwards. We saw some reaction to Jerome Powell's words in the Wall Street Journal's jobs conference, I believe, where he was questioned about basically the same thing that he was questioned in the FOMC conferences. I mean, really, nothing was changed in what he said in his rhetoric. So he just repeated himself to those people who are watching the conference in the Wall Street Journal conference. So I don't know why the market even reacted to that, but who knows? The market loves to listen to what Jerome Powell is saying and react to his words. So, but yeah, that's kind of it for SPY. The next thing I kind of want to look at after the market here is SCU. Okay, so this one reported earnings today, okay, after hours, and they're doing pretty good. This is a Chinese tech giant. Okay, I don't really know what they do, what they do, kind of in a broad sense, in a general sense. I haven't really looked into the company, but I know this name moves a lot, right? Especially when it decides to go at one specific trend, to the downside or to the upside. And currently, there's a potential that this is seeing a mean reversion, and this one can come back to that 50 SMA during these types of mean reversions where we completely move to the upside from a downtrend, right? So for SC here, I don't see much of an after hours movement. That might be because I'm not seeing it on any of my brokers or on TradingView. Like I don't see it right now. But for SC, what I want to see for this one is kind of I actually don't want to see a big gap up tomorrow as well. I do want to see nice consolidation, like at least 2 days at least worth of consolidation, and then a nice pump up. Okay, so SC, I want to see a nice big movement past towards, past 85 and 86, which is our main level of resistance here because of the previous level of support from, if you guys see right here. Okay, so hopefully we can see some type of a movement upwards from that point forward. Dion, what do you think about WBA? Oh, yeah, so it seems like you remember when I mentioned WBA and CVS, right? So CVS and WBA, right? They're both essential companies. When it doesn't matter if the market is in a recession, right? These are essential companies. People will depend on them for, pharmacy needs, self-care needs, mothers, right? There's a lot of products for mothers out there in CVS and Walgreens. So these companies they're essential, right? They're most likely going to be still very much in need, no matter if prices are high, if inflation keeps on raging on, and etc. Right? These are essential companies, right? So with that in mind, WBA, very, very good movement today, and on CVS, since I just showed you guys. We just broke out today on the daily time frame, right? This resistance, we're peaking out of it. Okay, it would be nice if we close above 45, but hey, we won't get our ideal situations every single day in the market. We rarely do, actually. So, it seems like we're trying to break above this, wedge. Right, this wedge chart pattern or symmetrical triangle. I see WBA continuing tomorrow until we hit this 50 SMA, which is around 25.40-ish to 50-ish. And there's a good chance that we can pop above the 50 SMA, considering how many times we've tried in the past year. All right, so depending on how the market is tomorrow, we might just continue to break above the 50 SMA. Obviously, on the intraday time frames, you're going to see some sort of resistance around 45.40-ish. Okay, so Dion, if you want to play the nice run up tomorrow to 45.40, you can do that. That's a great scalp. You have your profit target maybe around 45.50 if you want to bet on the fact that we can't see a little tiny pop above the 50 SMA. So, you can get in at 45 and then, ride for 50 cents. All right, it's a quick scalp. So I would recommend getting in the money call contracts for this one, or even at the money, right? Because at the money contracts, when they go from staying at the money to in the money, all right, that's the best way that a contract has a lot of a premium jump, right? Especially if it becomes in the money. So make sure you get contracts that are not too far out the money or too far in the money, where the premiums don't even move at all, right? You're already in them. 45.5. Oh, they're expiring this week. Well, there we go. If it's expiring this week, then you're most likely going to see volatility. And there's a good chance that you will be able to get a nice premium jump, especially if we head up towards 45.50. So, that's that's great. I'm glad that you got those strikes. That strike 45.50. I mean, that's perfect with the technical analysis here. So, WBA looks very good. I mean, long term, very, very nice. Okay. Thoughts on FANG? Good question. So, FANG, okay. Let's take a look at FNGU. Okay, so this is a leveraged ETF. All right, and this tracks, okay. I believe this tracks tech if I'm not mistaken. Yeah. So it's a leverage 3 times, right? And it tracks technology and consumer discretionary companies, right? So this is what I'm kind of looking at. Very, very cheap. I'm only playing this with shares here, but I've already kind of dipped my toes in here. I bought some shares around I believe Where did I get filled? 9.25 and 9.20. Okay, so I just wanted to see it hold $9 today, which is perfect, right? So FNGU, I think we're starting to see some sort of a mean reversion here. And Hassan, I'll get onto that UPST. That's also showing a mean reversion as well. So I think this is a time where we can get some really good gains for the next 2 weeks here, next 2 to 3 weeks, where everything just absolutely blasts upwards, especially the names that have been beaten down, right? So all the big tech names, right? The big, Apples, Microsofts, Googles, all of those companies, right? Netflix, right? I think we can see a nice big pump up, especially Netflix here. It's down what, 80%, 70% or something like that, right? Let me see. From all-time highs here, yeah, almost 80%. If I round up, right, almost 80%. So, companies like this, Netflix, even PayPal, right? I expect to see a nice, reversal to the upside, especially in all the big tech names. So Amazon here as well. It's already been kind of bouncing before even hitting that $2,000 whole number level. And it decided to close above the 10 SMA, which is great. So one or two things can happen on Amazon here. We can see, where's my brush here? So we can see another red day tomorrow here, right? And we come back down to retest the 10 SMA, which will start to kind of curve like this. Especially, here's the thing. The only condition that the 10 SMA will curve is that the price is going to continue to kind of retest on the 10 SMA, bounce, and then continue upwards. And that's when the 10 SMA will continue to curve and start supporting the price higher. All right. How do I know this? Well, because I've tracked the movements of my SMAs that I use my 4 SMAs for a long time. All right. So it takes experience, obviously. But I'm expecting Amazon to kind of get to that 2,250 level tomorrow. If it can. It's only a few points for Amazon. I mean, that's like what 50 points? So, excuse me, less than 50 points. But, I expect at least, right, Amazon to move a little bit more before coming back down to retest the 10 SMA as support. But Amazon also starting to show signs of a mean reversion. If you take a look at UPST, right, great close. Right, I mean, huge day, almost a 25% day, right? This is the type of bounces that you want to be looking at, right? UPST, right? And Hassan, if you're still here, there's another name that I want to show you for a mean reversion that is looking to kind of blast upwards like this, okay? So UPST, huge gap fill, right? A lot of supply they have to fill from, I would say around, from the current price right now to around, I would say 72 to 73, okay? But UPST, very big gap, right? So, I'm going to expect the price to come back and retest the 10 SMA here. That's the least that I'm going to expect. Sorry, the most I'm going to expect here. I'm not going to expect UPST to continue to fill in the gap because it's going to retest the 10 SMA and then reject. Okay, so I expect UPST to be at least around $53 to $54 before rejecting off of the 10 SMA the next 2 to 3 days. Okay, if it continues with this momentum. All right. Okay, guys, the next mean reversion play that I want you guys to look at, Coinbase. Okay, Coin looks very nice for mean reversion, and it has a potential to make at least 9 to 10 point run, based off of today's closing price of $70, right? And if you do the math, that's around $79 to $80, right? So that's also going to be another retest of the 10 SMA, okay? And if this mean reversion stays true, right? If we continue to see momentum, right, where the price continues to go up, right, and even if there's no or very low volume, right, I'm not going to care about that because the price, if there's momentum, is going to catch on fire. And the price will continue to move up higher no matter what the volume is. And that's exactly what we're seeing on UPST, right? I don't care about the volume, right? I don't care that the volume was very low and it's still kind of low when the price is going up, right? So for Coin, for mean reversion here, yeah, look at that volume of Coin, right? So we're going up and the volume's dying down. I don't care about that, right? So, you know, for this one, tomorrow, you guys can really day trade this. I'll post this in the Discord as well. But this one's looking to be a very nice trade, potentially a nice day trade. Do you have to see a crypto move? Not essentially. I know Coinbase, right? Obviously, most of the revenue comes from crypto transactions as well. And that's a fundamental part of the company. But at the same time, Coinbase also kind of follows how Bitcoin moves and all the big three, right? Bitcoin, Ethereum. You know, it's the I forgot the third one. I'm having a brain fart. But that's not the main thing. The main thing is that Coinbase follows, right? It follows, you know, crypto, right? But at some point, right, Coinbase is trading on the stock market, not the crypto market, right? So I'm not going to really pay attention to crypto for Coinbase. I'm just gonna, you know, look at it from a perspective that it's a stock and it's looking to have a mean reversion, right? And after months and months and months of moving to the downside, right? This stock was around $300, right? And it's back down to, well, it's down to double digits. So, you know, who knows? If this mean reversion is strong enough, we can see it come back to the triple digits. And usually, guys, here's the thing. Okay, here's the thing. If mean reversions are successful, the price can continue to go up, have a little tiny pullback, continue to go up, and kind of pull back, right? And usually, the prices come back to the daily 50 SMA. You heard it right, guys. The daily 50 SMA. So Coinbase has huge potential to come back to the triple digits here. Now, how do I know if, you know, how long this is going to take, right? Would I know that? No. The only thing that I know is that mean reversions, if they're successful, right? If we see continuous momentum in the price, right? If there's more buyers than sellers, I don't care about the volume. The price will come back and revert back to the daily 50 SMA because we've come away from the 50 SMA for too long, right? We've made a huge distance from the 50 SMA. And here is an example here, right? This huge downtrend here, right? And then a nice mean reversion. Back to where? The daily 50 SMA. Okay, so that can take weeks. Okay, obviously, we're really far away from the 50 SMA. So I still need to see some confirmation that we are seeing a mean reversion. And how do we see this? If the price retests the 10 SMA, closes above the 10 SMA, and continues to be on top of the 10 SMA. So you have three conditions there for me, right, that I personally use to see if there is going to be a mean reversion back to the 50 SMA. Okay, and guess what? All those three rules apply what we see here, right? We came back, bounced at a intraday or daily support level, okay? Came back to retest the 10 SMA, and on this day, there's most likely a little tiny rejection, right? Around, I would say, 166, 165.50-ish. And then we closed above it, and we kind of pulled back, retested the general area of the 10 SMA, bounced, and continued to stay on top of the 10 SMA, right? So obviously, eventually we retested the 50 SMA and popped a little bit over it and then continued to sell off, right? So that's exactly what I want to see here. This type of price action where we just continue to go up in a healthy, nice way, right? Until we reach the 50 SMA, right? So for this one, I want to see a nice movement to the upside. And I want those three conditions to be filled for a confirmation that we have a potential mean reversion on our hands. Okay, and same thing for UPST, right? But like I said before, we're going to see a rejection both on Coinbase and UPST on the 10 SMA first. Did that make sense, everyone? Right? So Amazon, right? Mean reversion potentially going to happen, right? So it did two of the same things here, right? Two of the three conditions that I want to be looking out for. It retested, right? The 10 SMA, rejected, and then it closed above it. Now the only last thing that Amazon has to do for the next few days is stay on top of the 10 SMA, right? Come back down, retest it as support, bounce on top of it, and continue upwards. Does that make sense? Right? So I wouldn't mind if Amazon pulls back to around 2,000, I would say around 2,280. 2,280 is that's not a bad idea for a nice little tiny pullback for Amazon, and then another bounce, right? And then we continue higher, right? So these mean reversions, right? Let me go over again. When I want to see confirmation, I know people don't use SMAs, but this is what I personally use for confirmation, right? I want the price, first of all, to retest the 10 SMA, close above the 10 SMA, and then stay above the 10 SMA, right? So that we can have a mean reversion and revert back to the daily 50 SMA because of the fact that we are so far away from the 50 SMA, right? So if I removed, right, not my pivots here. If I removed all my other SMAs, right? Some people had the charts like this. They only had the 50 SMA on the charts, and that's fine, right? This is also great, right? So for the 50 SMA here, right, you see that Amazon has a lot of room to go, and also there's a nice gap to be filled. So if this gap is filled, right, that's perfect because the 50 SMA, right, will probably around this gap here, so that the price can retest that 50 SMA, right? And that would be a perfect mean reversion type of trade where people, buy at the bottom near here, right, at a support, and they continue to hold until we see that retest the 50 SMA on the daily time frame. Okay, hope that makes sense. Right, everything goes for UPST. Especially if you guys are holding long-term call contracts or even equity, you guys should be able to hold, especially if you get a great entry and have a great stop loss, come out with profits after you hold, right? Especially if you know your profit target as well. But some people like to really just buy and hold, right? Have a nice position trade, not a swing trade, a position trade, like a months-long trades at a time for these mean reversions because they want to see the price actually retest the 50 SMA, right? So, that's also a great strategy right now to have for all these beaten down tech names. At some point, we're going to see seller exhaustion. And so far, UPST has been seeing that seller exhaustion. Coin has been seeing that, right? Amazon has been seeing that, okay? And all the other tech stock names. I mean, Facebook here or Meta, this is not really a mean reversion. We're just kind of bouncing on top of the 50 SMA, coming back down. I think there's a good chance that we continue to see kind of chop here for Facebook. But that's basically it for Facebook. I mean, I'm not really interested in that name. I'm going to wait for a few more weeks of a setup. Andrew Chow. No, I am not a Chow. I'm not Chinese, Vietnamese, nothing. You guys can guess my ethnicity. So Apple here, I'm currently in a contract for next week for 155. I'm going to take profits around 151.50 or around 151. And why do I say that? Well, if the momentum continues tomorrow, if it continues to move up higher, right, I want us to retest the 10 SMA. Again, right, I'm using the same conditions, right, same parameters for potential mean reversion, right? But for Apple, it's kind of not a mean reversion because we haven't really sold off that hard. I mean, we're kind of still in the same high prices. I mean, if you take a look at the weekly time frame, Apple is very, very strong here. Okay, sorry for all the text here, but this, right, very, very, very nice. Right, Apple is very strong. We haven't come back down. We haven't even come back down to COVID lows, right? While most other tech names have come back down to the COVID lows, right? So, for Apple here, I have 155 calls for next week. I'm going to take profits around 151 or 151.50, or just a simple retest and rejection at the 10 SMA is fine with me, right? So you guys don't always need to have a specific price level for your price target, but I highly recommend, obviously you want to do that, but if you know what you're doing, right? If you know what you're doing like me, I got in kind of early. I wanted to wait at a confirmation of 148, right? Since I did post this on the newsletter, right? Long over 148.10, okay? But I kind of want to see a nice kind of a bounce play at the previous level of resistance, which is 147, but we use it as support. So I took a bet on that and got in around 147.50. So, potentially, this will be a great swing trade for the next few days if we decide to continue to come back and retest in the 10 SMA, which I think it will. But I don't want to jinx myself, right? Who knows what the market will do tomorrow, especially with the VIX right back down at the 50 SMA. Okay, so so that's kind of it for me, guys. That's it for tonight. If you guys have any questions, please ask me on Instagram, on Discord. For all the people who are in the CFO Stream Watch newsletter or Discord, please go ahead and ask me. I will answer them tonight. Before I leave, I want to tell you guys about this Charts Focus One affiliate program. Okay, so we do have one. All right, I am doing a CFO affiliate program. I want my people to kind of spread the word on Charts Focus One and what we're doing here. So, it's something that I really enjoy doing. I enjoy talking to other people, even in real life, of what I do, what I offer to people, right? What I give in educational content. I really enjoy doing what I do. So, it's I really hope that people, I really rely on word of mouth, and that's how I've grown Charts Focus One, on word of mouth for the last 2 years when I started it. So, it's amazing how much we've grown so far on Instagram as well. So hopefully we continue to grow and I continue to meet more amazing people. Hassan, sure, why not? Let's go over this before I leave. So Disney. Yes. So Disney, great name today. So, like I said, I was, continuously doing a play-by-play of all the names, most of the names that we're looking at on the newsletter. Well, the names that were more interesting, the newsletter. And Disney was one of them that I was watching because it was interesting. And this one has a good potential for a mean reversion as well. We came back, retested the 50 SMA. Who knows, tomorrow we might see rejection again. But we already saw that today. We made the high of around 108.79 and we came back down and we ended up around 108.64, and the long entry was around 108.10, right? And for Disney here, there's a good chance that we can actually see another continuous run up tomorrow above the 10 SMA and then come back down. But this all depends on the market tomorrow. Okay, if the market decides to pull back again, we're going to see another red day. Right, we might potentially be seeing another rejection at the 10 SMA and continues to go lower. Right, continuous movement lower. Right, so for Disney, very simple. Right, if you got in at 108, great. Right, if you didn't, that's fine. If you continue to go up, 112 is your next entry. Right, obviously that's gonna be weeks long of consolidation that you need to wait for underneath 112. Okay. This resistance, we're going to see we need to see some consolidation before heading up higher and over that $112 for a long position. Okay. But yeah, that's it. That's it for Disney. Nothing much to see here. I mean, there's not really a chart pattern or anything like that. It's just a potential reversal play that we're trying to see here, right? A trend reversal opportunity, a TRO. Okay. That is what I call it. TRO, trend reversal opportunity. TRO. Right? So that's what we're seeing here. UPST, Disney, Apple, Amazon, Coin, right? What else? SC, right? This is another great opportunity for a mean reversion back towards that 50 SMA, which is another triple digit number here, around $100. So, watch out for all these names tomorrow, okay? Especially SC since it had earnings. That could be a nice big earnings run up. Okay? All right. That's it for tonight. There's some news for Disney. I'll go over that. If you want to post Disney news on Discord, go ahead, Hassan. Okay. That is it for tonight, everyone. Thank you all for joining. Make sure you guys like this video, okay? Like I said before, I thank you guys for really coming onto his lives, even staying with me for almost an hour here to listen to me and just learn. So I really thank you guys from the bottom of my heart for joining. If you guys aren't subscribed yet, make sure you guys are subscribed so you guys know that I am live, right? Hopefully I'll see you guys tomorrow as well. I will be going live maybe at a later time where people are more comfortable to watch the live stream. They might be working or they might be doing family duties or whatever it may be. But maybe tomorrow I'll just go back to the regular time around 7:30 or even 7 o'clock. That's Pacific Standard Time, by the way. So I'll just let everyone know tomorrow. Of course. You're welcome, guys. You're welcome. All right. Have a great rest of your day. I'll see everyone back on the CFO Discord for the people who are in the Discord. But for people who are not, I'll see you guys all tomorrow on the live stream around 7:30 p.m. Pacific Standard Time or 10:30 p.m. Eastern Standard Time. Thank you all for joining.